Patterns repeat in the stock market. Learn these three and you'll be ahead of 90% of the traders. When it comes to short-term trading, when I say that, it's day trading and swing trading. At the end of the day, we're really looking at patterns, like patterns playing out on the chart. Now, sure, we look for catalysts, hot sectors, trends, etc. But when it comes to the actual in and out, it's all patterns, patterns, patterns. And if you keep losing on trades, you might not be paying attention to the patterns. You might just be buying something that's moving, or again, following somebody on Twitter, or following somebody in a chat room, or some alert somewhere else. The best traders repeat the same setups over and over because the market moves in cycles. And let me show you how the three most reliable patterns every trader should know. And we've seen these, I've seen them every day for 20 years now. Right off the bat, in the morning, by far and above, the very best pattern you want to look for is the dip and rip pattern. Now, a lot of you know how much I love this pattern. If you've been on the channel or you go back, you'll see 10-year-old videos from me talking about the dip and rip. But I think that shows you the power of this pattern. The fact that I've been talking about it for over a decade, and here we are 2025, still one of the number one patterns. So what we're looking for is that stock that's ran up huge in pre-market. That could be 20, 30, 40, 50, 100%, and then opens weak. And when I say opens weak, at the 9:30 open, pulls back hard off of the highs, but then starts to put in a floor near the highs. So what I love about this pattern is it forces you not to chase because you have to wait for it to set up. Then, as that stock starts to base, that's when you're watching it, you're getting ready, your entry is actually at the high of the day. Now, I know a lot of people think that's chasing, but you didn't chase. You waited for the exhaustion gap, the consolidation, and then the move. And then what's great about it is that sideways price action where it base gives you a great stop loss area to where the dip and rip is either active or dead. Below that consolidation, busted, you cut the loss, you move on. But the longer it starts to base and lift off of that consolidation zone, the better your odds at the high of the day. In most of these stocks, when they make that move, you've got a small area, that tight band near the top for your risk, and when they go, they really go. Okay, like you'll see dip and rips that double, triple sometimes in a matter of minutes, hours, and some of them become multi-day movers. Now, a lot of people don't like it because sometimes you got to wait 10, 15, 20 minutes, an hour for it to set up. But my opinion is, especially if you're struggling, you should be willing to spend that time to increase your odds of success. Then the next one we look for as we move through the day is that weak open red to green. Now, the criteria for a weak open red to green is, and this is a great pattern because it's a continuation pattern. It's a multi-dayer, as we say. So this is that stock that the previous day had a really strong day. Like maybe it was the biggest runner of the day, maybe it was one of the top 5 biggest runners of the day, and then it closed strong on the day. Now, when I say closed strong, it closed at or around the high of the day at 4 p.m. We don't really look at after hours. After hours, low liquidity, not really, real price action, as we say. Most traders aren't trading in after hours. So what you use is the previous day's 4 p.m. close, or what we in trading land like to call the red to green, green to red line. What that means is if a stock is below the previous day's close, then it's red on the day. If it's above the previous day's close, then we say it's green on the day. Where that pattern comes in is that huge runner from the previous day gaps down, so it's red on the day. And with stocks of trading, pretty much every charting package you can do this. You can map that red to green line on your chart. I have it on every chart. If you watch any of the videos, you'll see it. It's white. It's a white line, but it's the previous day's 4 p.m. close. Recommend having it on all of your charts. So that gap down, then what we're looking for is that green move. So gap down, back above the 4 p.m. close, because now the day 2 continuation pattern is initiated, and when these stocks make that follow through, as we say, they tend to trend up for day 2 and even into day 3. Now that's kind of a midday pattern. So we start with dip and rips in the morning, middle of the day, which is 9:45 or later. Okay, we kind of divide the market up into several periods. You got pre-market, you got the market open, you got midday, 9:45 to 2, then you got power hour, then you got after hours. So those red to greens are killer right after we segue into the middle of the day. What's great about this pattern too is you see a lot of what I call real stocks make this move. Earnings winners, contract winners, and when I say real stocks, like profitable companies, mid-price stocks, like if you want to branch out of penny stocks is pretty much just dip and rip patterns. That's a pattern specifically for penny stocks. Week open red to green is applicable to mid-priced, even high-priced. I mean, I've seen Apple, Nvidia, MSTR do red to greens and be really good trades. So look for that week open red to green middle of the day. Now, I always got to explain, when I say week open, that means a gap down, like weak, like low strength. Sometimes when I say that, people think I'm talking about the weekly chart. No, weak, like can't pick up a lot of weight. So the fading price action, then the green move is what you look for. Then our afternoon pattern, which is by far and above the best pattern for anyone, in my opinion, is that afternoon VWAP hold. This pattern applies to penny stocks, applies to mid-price stocks, and even applies to, real stocks like the Magnificent Seven, etc. So what you're looking for this pattern is a big move early in the day. Like maybe some of you can only trade afternoon, or maybe some of you like to avoid the market open, which if you're new, not a bad idea. So we look for that big move early, and then midday consolidation at VWAP. Now, not specifically at VWAP, we actually look for a band. The band I recommend, I've got scans in Stocks to Trade. The Flux Algo actually does this as well. We're looking for 2% above VWAP or 2% below VWAP. So a 4% band of VWAP. Love to see these stocks just kind of chop around in that band. You see this every day. Most days there's 3 or 4 of these that do that. Bang around midday. And what's great about this pattern is it's a long short pattern. So you use that 4% band for entries on the long and the short side, because a lot of these stocks are big gainers. If they break out of the band, they become great shorts, or if they break out of the top of the band, amazing longs. And this applies to all price ranges, all stocks. So as you come back into the afternoon, you can run a simple scan in Stocks Trade, or you can use the Flux Algo to identify these stocks. And then if you're long bias, you buy the break of that band, so outside of the 4% or the 2% upside band, and you risk VWAP. Gives you a tight loss, so if it fails, you're out, quick, easy, and then you ride it to the upside. Now vice versa, if you are looking to short sell, and this is a pattern, 10 years ago, different market, when I was almost exclusively short bias, use the same pattern for almost all the shorts. The difference is it's kind of the same pattern, it's just upside down. You're trading the break out of that band or break down of that band, and you're risking VWAP to the upside. So that big gainer that consolidates and breaks down, you short it as it falls out of the band, and then if it does bounce back to VWAP, you stop out and you move on. So guys, 3 simple patterns that repeat every trading day if you know what to look for. Now I gave you all the criteria, but I know it can be hard. I know I did a lot of the hand gestures and all this stuff, but the best way to learn these patterns is to see them every day. And the best way to see them every day is to check out the Daily Income Trader System. I do a morning webinar, I do an afternoon webinar. You can see my screen, call out the patterns, answer every question. You can see a dip and rip in real time. You can see a week open red to green in real time. I mean, I'm sure most of you would agree, the best way to learn this stuff is to see it live and ask a question. Say, hey, what about this? What about that? I mean, it's like a classroom environment. So if you're interested in that, every trading day, mornings and afternoons, going over these patterns, check out the Daily Income Trader System. And then in closing, I'm always looking to learn. What's your favorite chart pattern? Maybe there's some patterns I don't know about. Listen, I only went over the top 3. There's morning panic dip buys, Okay, there's gap and goes. There's tons and tons of RCTs. I mean, there's all these patterns out there. What's your favorite pattern? Let me know in the comments.